busy traders! If finding time for trading in your hectic schedule is a struggle, I've got your back. In this video, I'll be backtesting a set and forget strategy for swing or intraday trading. It won't demand much chart time, making it perfect for those with full-time jobs or those who love to travel and have fun with their close ones and don't want to spend much time in front of the charts. If you're ready to make trading fit into your life, stick around and we're about to simplify it together. So here are the rules of the strategy. And just to be clear, I won't be focusing on kill zones. First, you should identify the next draw of liquidity on a daily time frame and determine the daily bias. Second, you should mark up the points of interest on 4-hour time frame, if bullish, the ones in discount, and if bearish, the ones in premium. Number 3, we'll be focusing on the 15-minute market structure and liquidity. We will wait for the price to make a market structure shift, or as others call it, change of character, in the direction of the 4-hour chart. For entry, we will be using the order block that caused the break or the origin block from where the whole expansion started. I will use gun box levels to make the entry mechanical, and I will be splitting the position into 2 to maximize my risk to reward. The target will be the external liquidity or the next point of interest that might be in premium if bullish and discount if bearish. I will demonstrate everything in the backtesting session.
So in this backtesting session, I will be backtesting limit orders on 15-hour time frame, which will be suitable for people that don't have too much time to sit on the charts and monitor trades on lower time frame or wait for lower time frame confirmations. So as you can see, I've marked out the daily order block that we have here and the next draw of liquidity. We can see that the price is creating higher highs and higher lows. And I marked my points of interest in discount on the last expansion leg on the 4-hour chart. So as you can see, all this area actually can be a point of interest, including this little order block there. But it can be refined, of course, on a lower time frame. For counter trend trades, I would look at the structure here and I would take shorts until these areas here, or like at least until here. I wouldn't target lower because we're in an uptrend. So let's see what price will do. I will just mark out the structure. So the current structure is still uptrend. Here was the last break of structure. And if this low is broken, we will have a market structure shift. Whoa, oh, this must be news or some, I don't know what it is. But yeah, we didn't get a chance to go short here. So let's see what's going on here. I will drop on a lower time frame. Let's see what we have here. Okay, so we had, let me actually use the horizontal way. So we had here London low, and we had some imbalance, and we have another order block that so we can refine it like this. Let's now check where price have come. Okay, price has not taken out yet this London low. Let's drop on a 15-minute chart and let's see if we're gonna get some form of structure. Okay, so now we created a high that broke the low. Okay, we got a shift in market structure. So we know that the daily time frame is bullish. We came into discount, we tapped into a point of interest on a higher time frame, and now we have a 15-minute market structure shift. And as you know, an order block is the last opposite move before the continuation. So it's not just the single candle. I would mark out the whole last move on the opposite side before the break. Another little order block is the origin block that caused this push on the upside. So for the current strategy that I would like to backtest, I decided to use Gunbox. This is something that I saw one community doing. I will leave a link in the description if you want to check them and join. The way they enter is by splitting their entries into the different levels in order to maximize the risk to reward, which is a really great risk management in my opinion. How I would do is I would place half of my position here, and I would target the closest area where price might stop, which we can define. Okay, so we had higher, it can be here. Okay, this is it. Let's mark up this breaker block. Let me actually check even higher time frame. Always look at the highest time frame. So price might go halfway from this imbalance. It might come to this breaker block and continue lower. There are a few potential scenarios. So what we want to do is, let's say we can combine more confluences. So in this case, I would measure to see where is the midpoint of the fair value gap that was formed, which was here. Let me mark it up with the horizontal ray. As ICT is teaching, 50% of the fair value gap or 50% of the order block is a sensitive area or threshold zone. So I do always pay attention to 50% of an order block or 50% of a fair value gap. And this aligns with this breaker block that caused the break here. We can also target here, but we are not sure if price is gonna get if price is gonna reach that high. Maybe price will just find resistance here and continue on the downside. Another confluence would be this 1.06 institutional level. So I would target here. So now we drop again and see. So one entry will be this one, 50%. Another entry would be from the 50 level. This way, your risk to reward will be higher. So if you had only this entry, you would have had 3.58 risk to reward, which would be only 1.75% if you enter it with 0.5%. But let's say if you enter half of your position there and half of your position here, this will drastically increase your risk to reward. So if your trade triggers both the entries, you will have an additional 8 risk to reward, which will be 4%. Of course, it's not a guarantee. Price might just come and take this entry and shoot up. But if, let's say, price comes deeper into this order block, then it will give you a higher risk to reward. And if price hits stop loss, it will be 1% for this whole position. So those are things that you should decide yourself how you want to do it and how you feel comfortable with. And of course, collecting data on such kind of information is very important in order for you to know how to optimize your strategies for the maximum return. So let's see how the price. Hold on. Okay, that trigger. And if the price hits stop loss, I will put another limit the same way here. Okay. So as we can see on a lower time frame, price came, tapped into the order block, and we started breaking structure on the upside, which is good. If we have one more break, we can move our stop loss to break even, because price might still come and tapped into our entries before it continues higher. Here. So now we can move the stop loss to break even, and I would move even the previous one that is in profit. So in this case, if price comes back, we will have at least a little tiny profit. Oh, this was fast. So as you can see, with that, we got 6% with the 1% that we risked. But if you only went with the first position, it would have been for 3.5. The reason why I'm not paying attention to the kill zones is because this is not a day trading. It's more of a swing trading strategy with which I believe we're going to be holding trades for longer than a day, than a couple of hours. Oops. When it comes to sell entry, here I would also mark up this point of interest if price decides to go lower. So as we can see, the last pullback before the break on the upside was this one here, which means if price breaks here, we're breaking structure on the downside. We got a break here, but the break was not the best, to be honest. I prefer to see breaks with a full body candle, not with a wick, but it's still a valid one, and we got some displacement here actually. So another potential entry would be from this order block here. And what makes this order block a good order block? It already took some liquidity, but we should be, of course, cautious, aware of the liquidity that it is sitting above there. So price already tapped into this block. I was playing it a little bit quicker, but let's see if we're gonna get an entry. So we pull up the one box. I will place one here. And what would I target? I would target, we're in a bullish. This is counter trend. So in this case, this stop loss would be way too big, and it's just not worth for me entering there, to be honest. I want to have at least 1 to 2. Let me pull up the feed for this whole move. Okay, we have already reached 50%, which means price might continue higher. And this is a risk entry. Let's check again. Okay, this daily has closed very bearish, so there is still a potential the price will continue lower. And if we check premium and discount from this expansion, we have just entered equilibrium, which is, let's see what's happening. So since it's a counter trend, I would only do this. I would place only one entry in this case with 0.5. Stop loss hit. This is a counter trend trade. Oh, whoops, this happened quickly. Okay, we have another point of interest here, but as we can see, we have a liquidity block here and here. But this can be also something that might push the price higher. Let's see how structure is on the long term. Okay, as we can see, price took also this liquidity. So we are continuing on the downside. Let's check the higher time frame. I would wait for price to enter premium if I want to go to look for shorts. And as we can see here, this is the high and this is the low, so we can mark them up as well. Okay, the low is broken, which means that our high moves to here. Let me remove this one. And let me see where price is at on the daily and on the 4-hour chart. Okay. We have some liquidity here, as we can see. So price is most probably targeting this liquidity. It's definitely going for this liquidity. Let me just mark that down. So now when we have our 15-minute market structure, price created some trend line liquidity, took it out. I would expect price to take this high and go short from here. So I would just mark up this point of interest or this order block, the last up move before the down move, and I would wait for price to liquidate. I can pull up the gun box, and in this case, instead of entering at 0 level, I would enter here, targeting the liquidity here. Let me see how my risk to reward will be. Okay. Oh, this is decent. I can even have one target here, and the other target will be lower. Let me put one more position on the 50 level. Okay, price reached the targets without us. It just stopped at this order block, which actually, if I didn't place price so fast, we can see that this is the disadvantage of backtesting. When we're in a live market, we have enough time to think and analyze. But here I just played price too quickly without taking a break and realizing, okay, price took buy side liquidity here, so it might potentially just respect this area, and we could get also crazy good risk to reward if we just placed one trade here with this tiny stop loss and then boom. But it's good to just mark up and be aware of these zones. Let's keep going. What do we have now? Now we have another break of structure. So it's really important to understand and know how to read market structure. One of the most important things, actually. Whoops. Oh, okay, we had news. Non-farm payrolls. Of course, I wouldn't be trading that day. So, yeah, I wouldn't be trading non-farm payrolls. So no point of marking up anything. I'll just pass this day. But we can, what's the time? After non-farm payrolls, what do we have here? PMI. This is a good zone from which we can definitely take a trade, but when there are news, I just don't trade. Now, yes, price broke structure on the upside with displacement, but when we have news, this could have been just a liquidity grab of this trend line. Price tapped into this. If you remember, if I actually had the limits here, I would have been kicked out with a pip. But yeah, I always remove them when we reach the target. So where we are at a 4-hour level. Oh my god. So as we can see, we just tapped into a point of interest on a higher time frame, and we had this liquidity grab. So I'm not gonna touch the market because this could be just a liquidity grab and continuation on the downside. Okay, no, it was not that. Price went up, all the way up. And of course, some people trade news. For me personally, no matter how good it looks, I don't want to risk my capital during news. Otherwise, if we just follow the order block, I don't think we would have entered here though. No, price stopped before the order block and went all the way up. Okay, so as we know, daily is bullish. Price came into discount. It's pushing on the upside. And now order flow here was bearish. Now order flow is shifting to bullish. Let's mark out the structure. We'll break here. This is the low. Let me remove all these lines so that we don't get confused. I will not take sells now because we tapped already into a discount. We shifted the order flow into bullish. So I wouldn't be taking any sells from here because there is too much liquidity above these highs. In this case, you just have to sit and wait. As we can see, price went all the way up, targeting this liquidity. And where did we come? We come to a higher time frame point of interest. Price is continuing on the upside, and price is overextended. So in such cases, I just don't enter. Okay, we created a higher high. We're creating higher highs and higher lows. Price is going for this liquidity as well. That's why, for example, if you're a swing trader, if you caught this entry here, when price tapped into this point of interest, of course it was during news, so it would have been tricky, but if you caught this entry, you could just keep and trail your stop all the way up. So am I expecting now the price is going to come here? Of course not. Price is definitely creating higher highs and higher lows. And when we saw this, actually, I don't like when price is overextended. That's why I wouldn't really enter here, especially when I check the time. It's at midnight or midnight my time, but 5 p.m. Eastern Standard Time when the day shifts. Here we created a higher high. We didn't pull back to this order block, so I don't like such structure and I'm just staying away. Okay, so here I played a little bit too quick, but I could have taken this order block, targeting this high and this high. So if I'm not playing price too quickly as I did, I could have made some profits here. And of course, like, maybe you will say, but why not this one here? Well, if we look at market structure, we can see that when price broke on the upside, this was the lowest point. So this was our low. In this case, price broke again. Where is the next low? The next low is this one here. So what can we do? Price is most probably creating some internal liquidity here. And we have also imbalance, which is another extra confluence. We can just take the gun box targeting the first liquidity that I marked up, which was this high, and another entry at the beginning of the block. Oops, we're already in. Let's see if we're gonna get smacked. And let me slow down. Yep, we got smacked. So what can we do from here? Price is overextended. That's why it's not good to enter in premium on a buy. It was actually not smart of me to enter there. But anyway, lesson. We just had the grab of this liquidity. If we look at higher time frame point of view, if we look at a higher time frame, this was the last push on the upside before the downside, before we broke structure here. What might happen? This might have been an internal liquidity grab. Price might respect this area and push lower. So from here, of course, we are bullish, but there is no guarantee that price will create a new higher high, which means that we can expect price to respect this order block and make a pullback, maybe 50%, maybe even create a new lower low. So let's see what's gonna happen. Here we have this extreme order block here. With extreme order block, I mean origin order block, or however you want to call it. We had a break of structure here. So what would I do? I would place limit orders. And by the way, this is not the way I trade. This is a new strategy that I'm backtesting. Because I want to have an account where I'm gonna trade without me sitting in front of the charts and monitoring trades actively. If you're fine with, if you don't want to hold trades for too long, you can also target just the swing low, and it gives you again a good risk to reward. Well, when the risk to reward is so good, I would not even target more, to be honest. Of course, price can go all the way down here. This is a very nice order block here. So maybe we can keep one position and trail it, and the other one. Let's say if you take profit at the swing low created here, you have at least secured the risk that you have, the risk that you've taken, and plus 1% extra, 1.5. And the other one, the final target would be, let's say, this one, which will be insane. But now I'm feeling a little bit like the blues online. But yeah, let's trail it. Let's try out. That's why we backtest, to see what works, what doesn't. Let's place this position. In. Boom. In. Oh, boom. Out. Okay, this was an internal liquidity grab for price to continue on the upside. That's why it's not the best always to take this order block. Hell yeah. Yeah, price came this order block that I mentioned earlier, which means this was a liquidity grab and price just came here. Let me see if it didn't reach 50%. Is it a high POI? Of course not. Look at the imbalance down there. If we pull up the feed, I don't know if I'm the only one, but I really struggle to focus when I'm backtesting. And I don't take enough time to analyze. go up. Oh my god, this is so annoying. How long time are we in this position? I don't think I would have held this position for so long, to be honest. Let me just move it to break even. I'm tired of it. We could maybe take just profits here instead of being so ambitious with the targets. In this case, when price is so close to take profit, I would definitely move. You see? I messed it up. Okay, this was also news. Never mind. This was so hard for the psychology, I swear. I believe that if I was holding this trade, if I saw this trade playing this way, I would have just taken profits here. And that's it. Okay, let's keep going. Price hit this target and tapped into this point of interest. Cool. Price is still bullish. I believe this was FOMC or something. I don't know why it's not showing all the news here, but this was definitely a move during news. Maybe CPI. Let's check how the daily chart looks like. Ooh, so bullish. We're looking for buys. It is definitely tricky to take trades from here. I would mark up this order block, but it seems to be a quite extreme. I'm not gonna have a stop loss of 50 pips, no thanks. Okay, we tapped this order block and we made a market structure shift on 15 minutes. So when we have such big order blocks, what can we do? We can take a trade. I would mark up this order block. I'll pull up the gun box here. Entry here. Target can be the previous high. I really like FX replay because it definitely makes me feel like I'm trading for real. And did you see what happened? If I put the entry on the 0 level, I would have been tagged in. But for now, another TP hit. So that's why sometimes we should not be too greedy to look for extreme risk rewards. If I had this entry, okay, 2.5. This was giving me 3.7. Never mind, let's move on. The good thing with the gun box is that you don't have to think how to enter. Sometimes I've missed so many trades because of thinking like, should I use optimal trade entry? Should I use breaker block? Should I use, I don't know what. Here we know, okay, this is it. And the stop loss is above 20 pips, entry at 0.25 and 0.5 instead of 0 and 0.5. And I don't like this. It's gonna be a loss. It built up too much liquidity here, took it out, and then displaced on the downside. nice order block for sales. Well, let me check just the structure. Okay, if we focus on the minor structure here, we can see that from this point when we started creating higher highs, we made a break here, but this is still valid because the extreme low has not been violated yet. And even though I don't like it, it's good to just follow the rules because we have to be as mechanical as possible when trading. So now we have a break of market structure. Our high is here. On the 1 hour, we had a nice order block there. Let's check on the 15 minutes. We have this one, which is a very tiny one actually. So price might just come at this breaker block. I will mark up the whole order block. So this has been just a liquidity grab for price to continue the upside, most probably. This is something that I struggle with. I forget to check the higher time frames when I'm backtesting. Okay. So we had a pullback and now we have another expansion. 4 hour, we have a really clean order block here. Let's see how price will approach this order block. But another thing is that yes, price broke on the upside, but as we can see, it broke with the wick, not with the body, which means that this might have been just destroy downside, destroy upside, and let's go down. We have a market structure break, still bullish, order block here. This was fast. It's good to have a set and forget strategy, to be honest. Because you might get crazy emotional when you watch price. We are not made for trading. So looking at the higher time frame, that's why it's important to do a top-down analysis. Looking at the higher time frame, I definitely have a better or a more clear picture. We can see that this 4 hour order block was nicely respected and tested 2 times. Price broke structure again, but what might happen is price might liquidate this low. So I wouldn't micromanage, as I mentioned, I wouldn't micromanage this structure. I would still pay attention and I would prefer actually to see price coming into this 1 hour order block, but let me refine it and see if I can find a better order block inside of this zone. Also, another thing is that this order block took out these relative equal highs. So we should keep in mind that we're in a daily order block that I marked up previously, and that price currently is just consolidating. And let's check the daily. we are definitely still bullish, but I wouldn't be surprised if price decides to make a pullback and come into discount in order to continue higher and target this high. On a 15-minute chart, we can see that our extreme order block is this one here. Because now we can even look for, no, we're not gonna look for sales. Not with this liquidity. Okay, cool. So if we pay attention, price tapped into this daily order block. We have an institutional level here. And we had a break with this placement or body. I mean, market structure shift with the body. Price reached the target without taking us. And here, for example, if you don't use this strategy that I'm currently backtesting, breaker block, you could have, with ICT concepts, you have so many ways to enter. You could have entered with the breaker block, and this is another thing that you can backtest. So you could have done the same thing, but on the breaker block. And this was actually the last push on the downside before we broke the internal structure. So let's see how price will approach this zone. When we have such a bullish order flow, I'm not interested in any sell positions. If price breaks this high, we can enter in the order block. And that's exactly what it did. But did it break properly? Not really. And what is the thing that I don't like? This might push price lower. If we look at the structure here, price is respecting a 1 hour order block to continue lower, or it might shoot higher, but both scenarios are possible. Okay, so price came into this order block that I previously mentioned, but it took this high, which is actually confirming that this might be a solid order block in this case, because if price stopped here, it is kind of telling to us that it might continue lower. But now I like that price broke structure on the upside and is testing this order block. Let's place an order. No, it doesn't want us. Let's remove the orders and keep going. And I think we're soon done with the month. And I played price too quickly. We could have entered here, but I was too fast. Yeah, we can consider this one as a mistrade. So in this case, I would have definitely placed an order here. So the 50 level wouldn't be triggered, but this one would have been triggered. Let's see if it was gonna be a TP. Hell yeah. Come take us. No, don't leave without us. even if it was at 1, I wouldn't get the entry. It happens. And I didn't even mark. Yeah, if it was 1, if I marked out the order block properly, it would have entered. So another possible trade management can be 0.25 here, 0.25 here, 0.25 here, 0.25 here. And that way you risk still 1%, but your risk to reward gets better. So let me remove my positions, but this would have been also a nice one if we got that in. And I think I'll finish the backtesting session here.
Starting from the beginning of next year, I'm excited to create an accountability group for traders. I'm offering free access to my Discord community for 10 individuals. Within this community, you will gain access to my analysis, and I'll transparently share the trades that I take. If you're interested in joining this community, please let me know in the comments about your current stage in trading and the struggles that you're facing. The primary goal of this community is to keep each other accountable, support and help each other, and grow together. I'll be actively providing tips and guidance on how to work on your weaknesses and improve. As we approach the beginning of 2024, I will review all the comments to select individuals who show a genuine commitment to putting in the work and have sincere interest in our shared journey. Looking forward to build a supportive and thriving community together. Okay, so let's look at the statistics. As we can see, for the month of January, we are positive 19%, and I was risking only 0.5% per position, or 1% per idea. So we had in total 17 trades, of which 8 were winners and 9 losers. We had a win rate of 47. I think one of the trades did not trigger both of the entries. If it did, then we were going to have slightly higher win rate. We can see that the average risk to reward was 6 almost, or 5.9. The max risk to reward was 11.54. Usually I wasn't aiming for such high risk to rewards, but for the sake of this strategy, I will definitely continue backtesting it and see if the results will remain so good. So it will be definitely exciting to continue backtesting it, and I can also share the results with you. So we can see that the average duration of the trade was 9 hours, and losing streak is 5, which means that in this case is 3 trades or 2 trades, because we were taking actually 2 positions per idea. And I know that this is gonna be the most disappointing part for people. Oh, I can trade every day. But that's actually the amount of trades that I take even with my scalping strategy. If we want to take quality setups, I don't think that there will be setups present every single day. We definitely don't have enough data to be able to draw conclusions of which session is more profitable. And also, this is supposed to be a strategy that won't require too much chart time. So I would definitely continue backtesting it without paying attention to sessions. My idea will be, if this strategy continues to have such a great result, I will be checking the charts at the morning, at the middle of the day, at the evening before I go to sleep, and I will be just setting my limits. That's all from today's video, guys. I hope you liked it. If you did, don't forget to smash the like button, subscribe if you haven't already, and let me know in the comments what you think about this strategy, if you find it easy to understand it, and if you're planning to try it out. And if you do backtest it as well, drop the statistics in the comments down below. Also, let me know if you want me to do other backtesting videos on different strategies. Trade safe, and I hope to see you in the next one.